I'm more positive on the Indian equity markets today than I was over the last 6 to 9 months for the following reasons. First, COVID-19 infections are past their peak. Second, economic activity is nicely picking up after the shutdown of the economy that was done in the beginning of the pandemic. Third, corporate sector in India has coped rather well with the pandemic. Fourth, Indian government has pushed through very important labor and agricultural reforms through this period, which will benefit the economy over the medium to long term. And fifth, BFSI sector, which is very crucial for the health of the economy. Many of the tail risks associated with that sector are behind us. Of course, there will be event risks over the next few weeks and months. But if you look past that from a medium to long term perspective, prospects of Indian markets look good. As I mentioned before, we are more positive on Indian equity markets from a medium to long term perspective. Investors should discuss their asset allocation with their advisors. If they are underweight on equities, I think this is the time to start correcting that underweight by deploying more money into equity. Of course, there are some event risks along the way in terms of US elections, in terms of Brexit related talks between UK and Europe. So one has to be mindful of these event risks. But from a medium to long term perspective, we do believe that the broader markets will do well. And therefore, if investors are underweight on equities, either through SIP or through a combination of lump sum and SIPs, I believe that they should be increasing their exposure to Indian equities. COVID-19 pandemic and the subsequent lockdowns announced by the governments has definitely dented Indian economy. Indian economy in any case has been decelerating for quite some time. But the lockdown really resulted in a significant contraction in economic activity, particularly in April, May, June quarter. On a year-on-year basis, things will continue to be negative for a few more quarters. However, I believe that one should focus on the sequential improvement in the economy and the corporate sector. That's what we are focusing on. So yes, this year FY21 is going to be a negative year in terms of economic growth, but the focus of attention for us is on sequential improvement. We believe small caps and mid caps are likely to deliver better performance compared to large caps from a medium term perspective. If you recall 2018 and 19, mid caps and small caps significantly underperformed large caps. Even in large caps, you will recall that the market was being driven by a handful of stocks. We believe that going forward, the recovery in the equity markets will be more broad-based. Already, if you look at 2020, mid caps and small caps have moderately outperformed large caps. We believe that will probably continue for the next 2-3 years. If you look at our funds, you will realize that we are playing 3 broad themes. First is linked to the medium to long term recovery in manufacturing in India. This is somewhat linked to the Atmanirbhar theme that the government has been talking about. Lots of focus is being given to reduce imports and encourage Indian companies to export. This particular theme cuts across various sectors like specialty chemicals, including pharmaceuticals, electronic manufacturing services, and so on. The second big theme is linked to agriculture. As you know, government has passed 3 very, very important agriculture marketing related bills, which we believe will have a far-reaching impact on improving the dynamics of Indian agriculture. In addition to that, because of good monsoons, even cyclically, agricultural sector is expected to do well. So that's second theme that we are playing. The third theme is linked to improvement in BFSI sector. As you know, BFSI sector has been going through very tough times over the last 3 years. And when the economy contracted in a big way in April, May, June quarter, this is one sector that tends to be very levered to the economy. However, we believe that many of the tail risks in this sector are behind us, and we expect this theme to also play out very well.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.